Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're going to be looking at Switchback Energy. It's the latest SPAC focused on the EV sector and there's a lot to be excited about this one. In this video we're going to cover absolutely everything that we as investors need to know about this company, and we cover a lot of things that I haven't seen anyone else talk about, so you don't want to miss this one. First up, an apology. I know I haven't been uploading on this channel enough and I'm really sorry about that. I have just been really busy in my full-time investing job. I work in private equity. I will make some videos covering what that is, what we do, but please bear with me because I have got some really exciting things coming for you. If you're new to the channel and like investing related content, then smash the subscribe button. Smash the like button if you like detailed, honest and frank investment videos where we look at everything about a company, all the good and the bad, and have an informed discussion about that. On YouTube, I do see a lot of other investing channels which are purely focused on the good things, sugarcoating everything about companies, but as good investors, that's not something we should be doing. We should be aware of the risks and the threats that the company faces and understand why we believe that's an unlikely outcome or what mitigants the company has against those. Because a lot of my videos are very honest and do address the threats and risks that the companies face, oftentimes my videos get a lot of downvotes. So please, if you like seeing this kind of content, please smash the like button, help improve the channel's like to dislike ratio, and help push the channel to a wider audience of people as well. It's massively appreciated. So in this video, we're going to cover four main things. First of all, what is the transaction? Secondly, who is Chargepoint and what do they do? Thirdly, what are the key things that we as investors need to know about the company? And number four, what I'm doing. As always, I'm not a financial advisor. This video is purely for entertainment and educational purposes only, but let's get straight into it. So, what is the transaction? Well, Switchback Energy is another SPAC, and this week it announced after many rumours that it was merging with Chargepoint. The deal's being funded by cash and trust that the SPAC has, as well as a PIPE investment from other investors, providing additional capital. Now, one we should really take note of here is Bailey Gifford, one of the early investors in Tesla and today one of the largest shareholders in the company as well. The deal is expected to complete, and that's when the ticker will change in Q4 of this year. And I think the question here is, are we going to see the same increase in price between now and that completion date that we have seen with many other EV SPACs this year? Now, once the deal is completed, investors in Switchback Energy will have around 10.3% of the entire company's ownership. What is really good to note here is that the actual investors in Chargepoint currently are rolling 100% of their proceeds into this transaction. What that means is they're not taking any money off the table. They are 100% all in on this transaction and delivering the future growth of the company. And that's really positive to see. It's not at all uncommon in situations like this for the management team to de-risk themselves slightly and take some money off the table. But for me, this is a really positive sign. So, what is Chargepoint? So Chargepoint is one of the leading companies providing charging infrastructure for electric vehicles. Predominantly it's based in the US, but it does have operations across Europe. And since it was founded in 2007, it's provided over 82 million charging sessions to its users. Chargepoint has quite a unique business model. The way it works is it sells charging hardware to its customers, and then on a subscription basis over many years, provides services and software that enable them to operate those charge points. This includes a mobile app, in-car software that identifies to users where the nearest charge point locations are. Ultimately, Chargepoint doesn't own the infrastructure themselves. They sell the hardware to the customer, and then on a subscription basis provide services and the software to them. In a minute, we'll come on to why this is so interesting and why as investors we should really be taking a close look at this. Ultimately what this means though is that the company can scale much quicker. They don't have the massive investment to make up front that many other companies do, for example like Blink. And if you don't know Blink, check out my other video that I made on them recently. And it's just a very investment-like model that enables them to scale a lot quicker than their competitors. Personally, I think this is a really interesting differentiator and makes the company quite unique. So, what do we as investors need to know? Well, firstly, Chargepoint is really well positioned in a market that's forecast to grow extremely quickly. When you're investing into Chargepoint, you're not picking a certain manufacturer of EVs that you think is going to win. When investing into Chargepoint, you're making a judgment call that the growth in the EV space will continue. Unlike making an investment into a specific manufacturer, Tesla, Hylian, any of those players for example, where you're making the call that they will have the winning product, with Chargepoint, all you need is the continued growth of the EV space to be successful. Looking at all the news, developments, press, I don't think there's anyone arguing that the EV space is not the future of the automotive sector going forward. So investors in charging infrastructure are very well positioned there. The overall EV charging market is forecast to be worth $190 billion by 2030. Now currently, based on some estimates, Chargepoint has a market share of around 65%. So just imagine if in 2030 Chargepoint only has a market share of say 10%, that would mean annual revenues of $19 billion. Now, I'm not saying that Chargepoint will have a market share that large in 2030. In fact, I think what we'll see is a number of competitors come into space and Chargepoint's market share be a lot smaller. However, the point still stands that if Chargepoint can continue to aggressively grow quickly, it will be very well positioned in an enormous market. Now secondly, we should look at Chargepoint's very resilient business model. If you've seen any of my other videos, you'll know what an important focus I place on resilience. Especially where we are in the economic cycle currently, resilience is so important. And the business model Chargepoint has, where it has contracted revenues from its customers, is extremely interesting and provides a good base of resilience. For example, if Chargepoint sold no new charging hardware for a number of years, it would still generate those revenues from the software and services it provides. Additionally, the EV charging space does offer a greater degree of resilience versus some of the EV manufacturers we see. For example, purchasing a new vehicle is a large investment and ultimately is a discretionary expenditure. However, if you already own an electric vehicle, you have to charge it to continue using it. So the cost of charging that vehicle is mission critical, it's non-discretionary if you want to carry on using that vehicle. And that dynamic gives it slightly more resilience versus some of those manufacturers. Next up, I think it's important to consider the value proposition for its customers, and this is reflected by the broad variety of customers which Chargepoint actually has. It provides charging hardware to consumers who want to charge their vehicles at home, to businesses that want to generate another stream of revenue, for example, existing car parks that want to electrify some of their spaces, fleet managers of large fleets who want to save costs. The diversity of this customer base is very valuable and is so important when thinking about the business going forward. Next up, the thing to focus on is the partnerships which Chargepoint has. Now, there's not much more to say other than looking at this page and seeing that there's some real impressive names on there that ultimately are important relationships for Chargepoint. Not only can Chargepoint grow by increasing their sales with some of these customers, this also provides some barriers to entry and a greater resilience for Chargepoint, given that these partnerships are more likely to use Chargepoint for any future investment into charging infrastructure rather than new players where there isn't that established relationship. Now, what are the key risks that could have an impact on our investment in this business? Now, first up is the execution risk. Now, obviously Chargepoint is already operational, it's already proven in that respect. However, execution risk for me is more focused around the ability to drive profitability in the business. The risk here is that new companies enter the market, depress the margins and the profitability that Chargepoint currently has, and make the road to achieving that profitability slightly harder. Now, achieving this level of profitability I do think in the long run is important for Chargepoint. However, I do expect any profits to be generated by the company to be recycled into investment, R&D, so they continue to be a leader in the market. Don't expect this in the near term to be a dividend-paying stock. Next up for me is the risk around warranties and hardware issues. Now, we saw the potential risk of this with Blink. However, the risk here is a massive cost to the company from having to make good its warranties. If products fail or if they don't deliver on what they say they're going to, and customers claim on the warranties. This is certainly something that as we get more information and as we can, we should do more due diligence on. Next up for me is the tech risk. The risk that actually a new technology comes into the charging space which actually makes the existing infrastructure as we know it defunct. Now, I'm not aware of any of these currently, but it's certainly something as investors in the charging space that we should be aware of. You know, for example, transparent solar panels which could be used in electric vehicles instead of windows. Something like that would really change the model, and it's something we should certainly be aware of as good investors. And another risk for me, which I ultimately seem to be addressing in every video I do, is valuation. Now, if you look in the deck, their argument is actually their valuation's fairly prudent versus peers. However, the peer set I don't think is 100% right. They don't have a similar business model and they're not operating in the same space. Personally, I think Blink would be a lot better comparator, but it is what it is. Ultimately, however, what we're looking at is valuation multiples many years out on the assumption that they hit their plans and are profitable by this period of time. And for me, there's certainly question marks over that. That being said, another EV SPAC, we've seen so much focus and attention on the sector this year, anything really could happen. It could follow the same trend that many others have, with a significant increase in price up until the point of merger, or alternatively, it may do nothing, it may stay at its current price level and not get the same level of hype and interest that some of the other stocks have. So finally, what am I doing? Well, personally, I like the sector. I have a strong degree of conviction that EVs will play an increasingly important role in the automotive sector going forward and ultimately are likely to be the future. I like the fact that this is not a bet on one manufacturer being successful. All we need is the continued growth of EVs and the continued demand for charging EVs to grow, and as investors in Chargepoint, we win. I like the fact the product's proven, there's a good management team behind it, and ultimately, I'm quite excited by this stock. So personally, I have made an investment in Chargepoint. However, I have a very long-term horizon on this. I'm not looking to trade in and out of the stock between now and the merger date. I think the long-term prospects for Chargepoint are extremely interesting. However, always do your own due diligence before making any investment yourself, and don't invest into a company that you don't know everything about yourself as well. So thank you so much for watching. I hope you enjoyed the video. Please let me know your thoughts and comments in the comment section below. Smash the like button if you like the video. Subscribe to the channel if you like investing related content, and I'll see you in another video. Thanks for watching.